Hey, morning everyone. Welcome back to Morning Cuppa 8. Happy Friday. Right, so looking at the S&P 500, right, well, it rose by 0.65% on Thursday session to close at the new record high of 7798 points level, surpassing the 7,800 mark intraday yesterday, right? However, equity market, if you see yesterday's movement, right, the equity market were pushed or propelled higher by the softer than expected July wholesale prices data, which also showed, the wholesale inflation holding flat, uh, easing fears for the further rate hikes as well. Right, so the further tailwind came as the benchmark WTI crude oil prices dropped over 2% to close at $81 per barrel, easing the broader cost pressure and also fueling gains across the tech and also the retail, the equity and also the real estate sectors as well. And to look at the China A50 futures, right? Well, it edged up by 0.12% during Thursday's session, showing a resilience even as the onshore mainland benchmark consolidated, with the Shanghai Composite slipping by 0.5% to close at 3,926 points yesterday. Also, if you see here for the China 50 futures, right? Well, it was sustained by the localized strength in the tech, the hardware, and also the computing infra counters following the optimistic guidance from the international AI peers as well. And also, I think the downside momentum across the broader onshore equity was contained after the PBOC reaffirmed target financial support for the key growth sector and also small enterprises. I think on these futures, these A50 futures, the sentiment in terms of sentiment, well, it remains positive. And if you look at the chart now, it has crossed above all the moving average, indicating that the momentum are now firm or leans towards bullish, right? And also, if you look at the WTI crude oil futures, well, it dropped over 2.4% on yesterday's session to settle at $81 per barrel, pulling back from the recent recent multi-week high. Also, the price correction was triggered by the major downward demand, right? The demand revision from both PAC and also the IEA, recoupled with the lingering pressure from the massive 17 million barrel built in the US commercial crude inventory, that reported by the EIA. However, the deeper sell-off yesterday were contained by an ongoing geopolitical flaw as the meeting or the negotiation, the diplomatic talk, I would say, over the Strait of Hormuz remained stalled and still kept any further upside movement towards the $86 stop loss, $86 level, which is our stop loss level. And I think the price now is crossing below the 20-day SMA lines, pointing lower, showing that the negative sentiment remains strong at this juncture. And if you see the FBMK LCI local market, right, well, it retreated by 0.4% to close at 7034 points on Thursday session, while the FKLI here fell by 0.69 or 0.7%, pulling back from the previous session or previous trading session's high on Wednesday. So I think the profit taking was led by the energy or related and also the plantation counters following their strong gains in the previous session. So also, just to note that the market breadth turned negative yesterday with 703 losers against 410 gainers as the trading desk exercised caution amid lingering geopolitical friction. And if you see here, right, well, it shows that the broader or I would say the broad-based sea of red across the Bursa Malaysia as traders lock in it following the um, uh, Wednesday surge or the Wednesday surge. I would say that the selling pressure was particularly evident across the utility sector, right? If you see here, YTL power down by 1.8, YTL around 1.8% as well. Tenaga is 0.5%, right? Also, if you see consumer services and tech services as well, the next down by 3.77%, with key banking and also the industrial heavyweight providing a little relief to the overall market as a whole, right? And talking about our Malaysia trading stocks that we published today, we have IOI Property Group. So the stocks on the counter is on its breakout formation at 4 ringgit level on a strong volume. So with that, we expect the momentum to keep bullish and the stock able to propel higher to test the next resistance level at 4 ringgit and 20 cent, followed by 4 ringgit and 40 cent level. So if the stock to clear below this 3 ringgit and 80 cent support, this could reverse across and trend lower. Also next we have THMY, the testing house company, right? THMY Holdings. Also the stock's experiencing a breakout at the 1 ringgit and 87 cent level. So if the stock remains bullish, we expect the first resistance is at 2 ringgit, followed by 2 ringgit and 10 cent level. And do keep an eye at this 1 ringgit and 75 cent level for any attempt of reversal. So today we have two breakout stocks, which is IOIPG and also THMY. Do keep this both of these stocks in your watch list and continue to monitor in terms of their movement, at least for today. And also, if you look at the FCPO futures will recover 0.5 or 0.6% during yesterday's session to trade at 4724 ringgit, right? Bouncing back after or recouping back after the Wednesday's profit taking pullback. Yeah, so I think the rebound was driven by the strong export shipment estimates for the early August, coupled with the recurring and also which also made the local supplies more attractive to the foreign buyers. Also, right, I think the robust pre-festival buying expectation from the India helped to offset the higher July stockpile data from the board as well. And at this juncture, we are still targeting for the 4,900, followed by 5,100 resistance level, with our stop loss remains capped at 4,530 level. And if you see here, price also remain strong above all of the moving average level. Right, so I'll stop here and pass you to the next presenter. Thanks everyone and happy trading.
All right. Okay. Good morning, everyone. So today we have a company update on Gamuda. So yesterday, Gamuda announced that it secured a renewable energy project in Australia, in Queensland particularly, worth 1.6 billion ringgit in total for two projects, which is the Majors Creek and Ganimira solar and battery energy storage hybrid project. We understand that this project comes from a client called Edify Energy. And this is not the first time that Gamuda actually secured a project from Edify Energy. In fact, the first project is secured from Edify Energy was back in May, which was for the Smoky Creeks and Guthrie Gap solar and battery energy storage project. I know taking this latest win into account, Gamuda's FY27 year-to-date wins now stand at about 3.6 billion ringgit, while order book is at about 56 billion ringgit. So even after taking the order book burn rate between now and December, which averages about 1.3 billion ringgit based on our assumptions, and assuming that Gamuda would not win any projects between now and December. They are still actually quite comfortably near the 50 billion ringgit order book target by end calendar year 2026. So they are moving ahead. There are also certain projects which Gamuda has been shortlisted or I think selected as an ECI contractor, which is for the Mortlake Energy Hub, which we believe outcome should be known in the second half of 2026. That's about 700 million Aussie dollars. And of course, we don't discount any possibility for any potential project wins related to either the data center space or any more other RE projects. So, given that the latest job win is within our 20 billion ringgit FY27 job replenishment assumption, we made no changes to our earnings estimates, and hence our target price of 6 ringgit and 2 cents remains. So yeah, that's about it for Gamuda. I'll pass on the floor to the next speaker, John. Thank you.
Thank you, Adam. Let me continue with a results preview for Samaiden. The group is expected to announce its fourth quarter results on 26th of August. We expect the core earnings to be in the range of 8 to 9 millions, which translates to a year-on-year growth of 12 to 24%. This is tracking towards our full-year target of 33 million, and the earnings trajectory is underpinned by the commencement and progressive construction of their utility-scale solar projects and a stronger net margin, which is around 9% as at 9 months FY26, up from 6% last year. Looking ahead, we raised our FY27 to FY28 order book replenishment assumption ahead of the LSX6 award anticipated in first half of calendar year 2027, given that the 2.65 gigawatt solar capacity under LSX6 is higher than our initial 2 gigawatt assumption, while the inclusion of battery could lift the total capex to an estimated 13 to 15 billion. We have therefore raised our LSX6 driven order book job win for Samaiden from 1.3 billion to 1.5 billion, which is implying a 10 to 12% market share. This remains within their historical 10 to 15% market share of the previous LSX tenders. Although management is targeting a higher 15 to 20% market share under LSX6. Meanwhile, Samaiden's outstanding order book remain healthy at 536 million as at third quarter, providing earnings visibility into FY27. Also, the solar panel prices have stabilized, which is hovering around 11 cents per watt, down from the recent peak of 13 cents per watt. We do not discount the possibility of a further pullback given a softer raw material cost for the PV modules. All in, we continue to see upside potential given that Samaiden is still trading below its 3-year average PE of 24 times, despite rebounding from -1 standard deviation amid the ease of solar panel price concern. So we keep a buy call with a higher target price of 2 ringgit 11 cent from 1 ringgit 84 cent. After rolling forward our valuation past year to calendar year 2027. That's all from me. Let me pass the floor to the next speaker. Thank you.
Thank you, John. Morning, everyone. This is Vanessa from the Warrants team. So I'll just bring attention to some of the very active counters yesterday. Very active warrants. Okay. All right. So we actually see on the list, the one that topped the list was UEM Sunrise C2N, and followed by YTL C2Q and Gamuda C40. All right. So, but if you notice, I actually bolded some of the warrants name. UMS C2N, Penta C66, and Skyship CH. This actually represent the very high demand warrants where we see net sold of all these warrants. All right, so UEM Sunrise C2N, the sensitivity is at 2 ticks, and it's giving everyone an effective gearing of 7.2 times, which means every 1% move in UEM Sunrise will actually bring this warrant to move around 7%. So 7% up or 7% down. All right, so it's actually very, I would say, is a warrant with very high risk reward. Okay, Penta C66. Oh, if you notice, right, we actually saw very, very high trader volume since last week, which is before the QR, and also currently is still trading actively by the investors, and the spread, I mean the bid and ask spread, is actually still very tight. And the third one, Skychip CH, I would say this is always the all-time favorite of everyone when they are trading Skychip. So Skychip CH is currently trading less than 10 cents, so it's around 8.5 cents on the bid price. And if you want to know more about the movement of shares, then the movement of the warrants, then you actually have to use price metrics. Okay, so these are all. I wouldn't say all, but this is like half of the list of Sunrise call warrants in the market. RHB was the top traded yesterday, but I would say that it's not the only number that represent whether the warrant could be very good or not. But if you know how to actually look at warrants, and there's this one indicator called implied volatility. So implied vol, if it's low, like for example, UEMS C2M at 36%, right, it's actually very cheap. All right. But I would say that we price it at around like 50.2% implied. The price is like around 50.2% implied vol. It's actually considered quite rational. All right. So if you want to trade more, or if you are still bullish on UMS shares, then UMS C2N would be one of the warrants that you can actually explore. And we have actually also invited Sunrise Berhad to do their corporate briefing on this Retail Corporate Day. It's actually a collaboration between RHB and also Bursa Malaysia, and happening on 22nd August, which is a Saturday, which is next Saturday, at Kiara Bay Sales Gallery in Kuala Lumpur, close to Kepong. And if you are keen to join, you want to listen to Sunrise physically, then you can actually scan this QR code and register yourself. Besides from Sunrise, we also have invited Skychip Berhad. The finance director from Skychip Berhad will also be doing the corporate presentation. And since also it's actually an event about structured warrant, we have also invited Macquarie Warrants Malaysia to have a panel session with me. And last but not least, we have Joseph to present on the market outlook on that day. All right, so if you are keen and you have time, please scan this QR code and register yourself, and I'll see you next Saturday in person. All right, so that's all from us today. If you have any question, you can call this number regarding structured warrants. And thank you so much for dialing in. We'll see you on Monday, the same time at RHB Morning Cup by 8. Thank you very much.